Okay, all right. Good morning, everybody. Today we're focusing on ICHRA, okay? And it's individual coverage health reimbursement account, okay? I've gotten quite a few all ask me, hey, what do we do for ICHRA? I want to focus on ICHRA, and it's a good thing. I asked Charlotte to join us. She's from Take Command. It's I guess maybe a third-party administrator that helps implement the ICHRA, but then also will do the enrollments. And I'm going to let her take over on here, but I'm going to paint the scenario first, guys. Okay. So I'm going to find it here in a minute. Alexis. Okay. I just wrote a group. Okay. It's a 16-man group. Okay. These guys are making a good amount of money. Okay. So they're making some money. Hey, will you bring me the United group thing that you took? We're gonna call. Okay. The group has enough money to pay the premiums for the 16 employees. Okay, perfect. Okay. ICHRA's not really for, in my opinion, not for that. I'll let Charlotte talk about that here in a minute. But I'm going to share with you the rates. Yes. You see, no, it's up right there. Okay. Let me give you an idea of what these rates are looking like. Okay, so they've got United Healthcare, and this is what it's looking like. Okay. For the employee only, $584 a month. Okay, write this down, guys. This will make sense to you. The spouse, $1,315 a month. If the employee adds themselves along with just kids, $1,113. If they do a family, this is crazy, $1,849. All right, so you see those rates, guys. Those are some serious rates, okay? Now, the employer is only matching 50% of the employee-only rate. So 584, he's putting what, 252, maybe $300 a month. Okay, but the entire family is the rest of the dependents are kind of screwed. So $300 a month, 16 employees. This guy is paying $4,800 in matching 50% contributions. Okay, and they have the money, no big deal. But a lot of small employers do not have that money to pay every single month. They just can't do it. They would love to come in here and offer a group plan. Okay. They would love to. And that was HMO rates. Let me just say that. Not even PPO rates. Okay. So they would love to offer a group plan, but they don't have that 50% matching contributions. And on top of that, guys, this is a very young, healthy group. Now you get into an older group with people with conditions. It's going to get even more expensive. So that's the scenario. So with that, Charlotte, I kind of painted the picture there. I'm going to let you take over. I'm going to remove myself from the pen. I'm trying to figure the Zoom thing out, but I'm going to put you on there so you can take over and share your screen if you want to. And guys, if you have any questions for Charlotte, please let me know and put them on the chat and we'll let her take over. So thank you, Charlotte, for being here. Appreciate it.
Of course. And you know, one thing that I think will help kind of frame the conversation as we move forward is, Luis, you all focus on smaller employers like 50 less, or do you do more individual coverage? Like, tell me a little bit about, you know, the group that's on the phone here. Let's see, so 21 of you. Hello, everyone. Good morning. And that, I think that'll help me answer some questions before I get them also.
Yes. So let's focus on the small group, 49 and under. That's
49 and under, perfect.
49 and under, and that paints a different picture, guys, because if you get into the 50 over, it kind of changes things a little bit. Yeah. But 49 and under, that's considered small group. And the rules are different for those employers as they are for the 50 and over large group. So let's just focus on small group.
Perfect. Okay, so good morning. I'm Charlotte Smith. I have been with Take Command since November, and I was really brought in to manage relationships with brokers and consulting firms just like yourselves. And so the education piece, which is a big part of what I do. And then, you know, if way in the future we want to talk about like partnerships as far as referrals, or if you have RFPs, this really today is a lot more about what is ICHRA, who is Take Command, how can we help you both find potential clients that would be a good fit for an ICHRA, and then how will we work together once there is a potential client. So that's kind of the plan for today. I'm of the vein where if I have a question in my head, it's the only thing I can think about until it's answered. So if you have a question, I'll kind of pull the chat box up over here on the side. If you wouldn't mind putting it in there, and then as I go through, I'll kind of keep my eye on the chat as well, to make sure that your burning questions are being answered. All right, so we'll get started.
Okay,
Just very
Charlotte,
brief.
let me just ask, and what screen are you guys seeing? Is it, you're seeing us, or you seeing the presentation?
The
'Cause I'm
presentation,
flipping around. What's that?
the slide.
Okay, perfect. Okay, that's perfect. Thank you. Okay, go ahead, Charlotte. Sorry.
You're good. Okay, so Luis mentioned that Take Command is a third-party vendor in the ICHRA, and really what we do is we help you and your clients administer their ICHRA program. We started doing this before ICHRA was available. A lot of you probably are familiar with QSARA, which is qualified small employer HRAs, and that kind of is the baby sister to the ICHRA. And so we started working in that field. ICHRA became available January of 2020. And so we were set up already with our platform to start doing that full force in 2020. We probably are the oldest vendor in the space of ICHRA, and that means we have a lot of experience and expertise in designing the programs, helping clients with their compliance issues and reporting. We have over 5,000 clients across all 50 states. As you can imagine, since we started with QSARA, a lot of those clients are right in that size space that you all focus on. We work with a lot of brokerages across the country, and we even have our CEO, Jack Hooper, is a thought leader in the HRA Council, which is a nonprofit organization that really is tasked to make ICHRA better. And so it's made of ICHRA vendors, it's made of policymakers, it is insurance carriers that are all part of this council. We actually had a couple representatives in Washington, D.C. a few weeks ago, talking to staff members of congressmen and Senate members, really with the goal of taking the ICHRA regulations out of just a regulation and into law. And that is one of the biggest things that we're working on there with the HRA Council today. So what is it? What are we doing? Okay, I see a lot of group plan numbers in here. So the individual coverage health reimbursement arrangement at its very simplest allows your employers, your clients, to not be in the game of getting prices from insurance carriers. That's what we're used to in a group health plan, right? Is that your client, Bob Berger, says, I would really like to offer insurance to my employees. So I'm going to go get some quotes from Blue Cross, from Cigna, from UHC, as is in the chat. Find out how much our premiums are going to cost for my population, and then allow my employees to choose this plan. So it really makes your client like they have to take the price. This is the price of the plans. Do you want it or not? Your employees then can take it. What an ICHRA does is it allows your clients to say, I really want to set a budget and be able to make that budget maker instead of a price taker, and say, I really would like to offer something to my employees. And of course, the size we're talking about, they don't have to, right? So it's out of the goodness of their hearts, they would like to be able to offer something, but they want it in a set budget kind of way. So the employer says, I want to set aside a budget of X, and we'll help you determine what the X should be. And then they give those dollars in a tax-free arrangement to their employees, and those employees go find their own plan on the individual market. That allows for, and I'll just flip this slide here, that allows for a lot more choice for the employees in this scenario. They get to choose what is going to be the best coverage for them and their families, subsidized by their employer's dollars. For your client, it allows them to set a budget and have some cost controls there. It also removes a lot of the risk that is associated with having a group health plan. Some of those risks might be renewals increasing in the double digits year over year over year. That becomes really unsustainable, especially for these smaller employers. But also, one of the things that makes a group health plan, their premiums increase so much year over year is those high cost claimants. When you move into the individual market, the risk is no longer on your client with only 16 employees. It's on the individual market with millions and millions and millions of people in the individual market. So it spreads the risk out quite a bit more, and it allows for a much more consistent renewal each year versus one or two cancer patients that are just going to blow their premiums out of the water. Also, when you're in an ICHRA, there's no participation requirement. And that's really important, especially in those 49 and less employers. If they're offering a plan, but not enough people sign up for it, then they can't have it. In an ICHRA, they offer it. And if one person takes it, there is still a benefit to that person, and they don't have to claw back the offering because not enough people signed up for it. I'll talk about that quality coverage in the next slide. But are there any very basic questions about what ICHRA is? And we'll talk a little bit more about the design process in a few slides here.
No, as of right now, I don't have any questions on the chat. But yes, very true, guys. So when you start running group rates, it's difficult. So there's a lot of factors that go into this rating. What's the participation rate? There's some plans where health questions are asked, and there's some where they're not asked. So there's a lot of variables. And when she mentioned clawback, well, what that means is if you don't have enough participation, they penalize you in the sense that they make the rate more expensive. And then here's the other crazy thing. I don't have a lot of groups. I probably have 10 or so groups, but the rates are crazy. These guys are getting anywhere between 15 and 20% rate increases from one year to the next. And I'm like, and I tell them that's normal. Expect it. Don't get all bent out of shape and freak out. That's the normal. And we try to shop it around. But again, when you're shopping from one carrier to another, you're having to deal with new networks, new plans, new cards, new applications. It becomes a pain in the butt. So you are right. This does give the small employer a lot more choices.
One of the main ideas behind, moving the onus of the plan from your client to their employees is think about, your HR admins that are probably frazzled every day. There's no way in the world they can know hundreds of individual plans, right? So it takes them out of the seat of Johnny coming into her office and saying, hey, I need to have a question about my deductible. She can't know all of that. So it really puts the onus on the employee that I need to go either call Take Command and have them help me or call my carrier directly. So it frees up some of that headspace of your administrators on all the plans that are available. And let's just talk about the plans. The Obamacare, ACA, healthcare.gov launched over a decade ago. And if you have been in the business for a little while, like I have, you probably remember how chaotic it was. Because it was. I remember the headlines. It has grown and changed quite a bit since then. And again, we're over 12 years past the launch. So what kind of plans are the employees going to be able to purchase with their HRA dollars? There's going to be all of the logos of the carriers that you recognize from the group health plan space, the UHCs, the Blue Crosses of the world. There are also players in here that are experts in the individual market, like Ambetter or Oscar or Molina in Texas. So there's going to be quite a few choices. All of the plans are ACA compliant. What that really means is free preventative care, coverage for those essentials. No medical underwriting is really the reason why this works now when it didn't work before. So employees don't have to go through those major health questionnaires to find out pre-existing conditions and then determine their premium based on their individual health. Premiums are based on your age and where you live, period. That's it. So without that medical underwriting, it really makes the market a lot more able to handle the risk that's coming in across the board. This little note here, if you have clients that have employees that are over 65, they can reimburse them for premium dollars, but it has to be through Medicare. So there's kind of a side partnership we have to help people enroll in Medicare, but your clients still can reimburse for Medicare premiums. They just can't sign up for an individual market plan. They do have to go to Medicare if they're over 65. There are millions of people in the individual market. Lots of choices. There are some really, let me flip to this next slide here. There are some states where it's a no-brainer to put in an ICHRA versus a small group plan. I'll explain what this slide is. And then there are states where you see like Texas is purple. Texas is a really good, is everybody in Texas on this call? Or we?
No, all over the country.
All over the country. Okay, good. I'm glad I put in the full state then. So there are states like Texas where it might not look green, and this is 2019, so I'll flip to the next one, but it's still a really good market. So let me just give you a kind of like a tour of what this slide is. So on this slide, we're just showing how the individual market has changed over time. So in 2019, this is what the map looked like. Green states are where the individual market is less expensive than the small group market. Now I'm going to flip to what 2024 looks like, and you can see the map lights up a lot more green. So this is where we're really getting a lot of traction. A lot of the areas that are green is where the state has a reinsurance program. And all that's really doing is asking the carriers that have individual plans to not increase their premiums over a certain amount. And then it's kind of like a stop loss almost, but on the individual market. So if an individual spends more money than what the carrier is comfortable with, the state will come in and cover over it. So it allows the premiums to stay lower than those small group plans. I see Georgia's a great state. Virginia's a great state. Colorado's a great state. And I'll just say, kind of like my priority this year, I have 9 states that I'm focused on. Georgia, South Carolina, and it's the real green ones. Georgia, South Carolina, Ohio, Colorado, Texas, Maryland, Virginia, and Indiana, and Minnesota. Let's see, did I get all of them? Just to kind of give you an idea. I can't focus on all 50 states at once. So I'm starting with those that have the individual market where it's less. One thing that I will send this deck afterwards, but you know, at the beginning, we were talking about some of those small group plans. We have, and how much they cost. We have a window shopping tool. So you can go in here, and I'm just going to show you real quick. Where's it pulling up over here? Move this over. So you can go kind of play around with this and say, okay, I live in Collin County. I'm 41. You can add family members. I'm just going to show you the individual rates and then see what plans are available and how much they cost. So I have 133 plans, and this is Take Command's website. We pull all of our information from IDEON that the logo was on the last slide, to pull a lot of this, but you can start seeing exactly how much the premiums are gonna cost, and what carriers are available based on the zip code that you put in. So I have, these are my choices: a Blue Cross, a United, a Molina, Aetna, Cigna. And then you can start searching for, you know, if I want a certain type of plan, if I want to search to make sure my doctor's in network, et cetera. So this is just a tool that you can play around with. And I'll send that link. But it just starts showing, let's see, you quoted a bronze. You quoted employee only. I don't know the level of plan, but starting at 350 for employee only on this bronze HMO, and then they go up from there. So really the employee gets to choose, do I want a higher deductible so my monthly premium is lower? Maybe that's someone that's really healthy and wants just the lowest premium that they can, or the premium that their employer is covering the whole thing. Or maybe they have a lot of health issues and they know that they're going to reach a deductible pretty quick. And so they choose a higher premium just so they have a broader network. That's just an example. So, again, the individual market has changed and grown over the past decade, and it's becoming a really viable option both for employers and their employees for the cost. This, when we look at a specific client for you, we can do something like this. So I live in Denver. If you want to put a proposal in front of one of your clients, we can just show them a snapshot of what would be available. And that's basically just narrowing down what was in that shopping tool. So there's 6 carriers available, 113 plans. These are the type of networks, and these are some of the logos that you'll see if you lived in Denver. So that's just an example. All right. I was just going to comment. Mike lives in Florida. Florida is a really good market. We struggle a little bit there right now because Florida Blue we are not appointed with, and we can get more into that in a little bit. But they kind of own the state. It doesn't mean that we don't have Florida clients. We do. The experience for the employee isn't quite as good because they have to go enroll themselves and then come back to take command for the rest of the management. It's a whole thing. We're working on it, I promise.
Yeah,
Okay,
that's a hard one, Charlotte.
that's a hard
Even on
one.
the
I know.
AC to for Florida only.
Yeah,
And guys,
Florida
and
Blue
then,
is.
and then let me tell you one thing, guys. Just in Texas, I will tell you, and I do commercial insurance quite a bit. And even though we were purple and not green, I would say 1 out of 20 have group insurance. The other 19 small employers, it's not even in the ballpark. And nor do they want to, nor do they have to have it, and nor do they have the money to do the contribution requirements. So it's still wide open. So if you're in a purple state, as she showed, don't think, well, this is not for me. You still run into an employer, you can still get in there and offer an ICHRA option for them.
And one thing to note is we have our sales team is built out in a regional model, and that's really important to know the differences between like what carriers are in each region. So, I think Virginia and Maryland have Care First. So that's important for our regional pods to know about. Whereas, Colorado has a state exchange. So there's different nuances of each region that when you all start working with us on clients, you'll be paired with one of our regional account executives, and they'll have a lot more expertise region by region than I do. And so that is part of what we really try to take on when we work with you all, is that expertise and really helping build a plan that's going to be viable for your clients based on exactly who your client is. So Take Command really is the platform that will help administer an ICHRA program for your clients. So it's everything from training and education of you all and your client HR admins, to a step-by-step onboarding where we're going to analyze what's going to make most sense so that your clients are compliant and setting a budget that's going to make the most sense for them. Once the client is onboarded, then really it's all about the employees, helping them shop for their network. So I showed you the shopping tool. 133 plans is overwhelming. So we have human support that's going to come in and help them shop for tools. So what's most important to you? Is it this medication is covered? Is it this doctor's in network? Is it that you're on an EPO, not an HMO? So we really help narrow down the choices for them. And then what happens is you all remain the broker of record on your client. We take over the agent of record on all the individual plans. That allows us to make payment, to help with claims processing, to do any of the other coverage type support issues that an individual employee might have. And then we'll get to how you're paid towards the end. But we are the agent of record on all the individual plans so that we can help the employee in the most significant way. On the tail end of things, we're helping with reporting, compliance, working with the admins in our portal to upload eligibility files and manage turnover and all of those things. That really is what our technology is doing. And then having this in-house support is really important to have someone to talk to and work with if things aren't going quite right, or if you're confused, or if I don't know which plan to choose. That's really important. And that's both for your admins and for the employees.
Hey, Charlotte, out of curiosity, and I have a question here sent to me, is when we offer the ACA plans to these employees, state exchange versus the federal exchange, is there any difference?
So by law, we show everything that's available. And I don't know if that really is the question, but we have to show everything that's available and then point individuals to the right plan for them. We're going to tag things. Did it show it on here? Yeah. Let me pull this back over again a second. We'll tag things as easy enroll, tax advantage. So there are certain tags that we're using to help people narrow it all down.
Okay.
But easy enroll is the best thing to do because it means that Take Command is submitting the application for you. There are some in the exchanges that we can't do the easy enroll. They'll have to go out and enroll and then come back and give us their proof of coverage. But we are showing everything that's available on the exchanges as well as individual carriers that aren't on the exchange.
Okay.
Did that answer the question?
Yeah, so I don't think it matters whether you're in the state exchange or the federal exchange for that state. You're still going to show all the carriers that are available.
We show everything. Yeah.
Okay. Yes.
We have to. Yeah, and that's it. This is going down a rabbit hole, but you know, we have some really creative, and I love creative brokers come and be like, okay, so I'm going to build this plan where I'm going to give you a file and you have to, will you please enroll them all in this specific bronze plan? And then we're going to wrap this other thing around it. And like, that gets a little iffy because really we are beholden to show everything that's available. So I love creativity. And if y'all have creative ideas, please let's talk through it and see if it'll work out. But there are some things that we can't do for compliance reasons. Do we need to be licensed in the state we sell ICHRA? That's a really good question. We do. So part of how we pay you all is to share carrier commissions. And for that component of how you all get paid to set up an ICHRA at Tech Command does require a license. Now there's another way that we pay you as well. So if you don't have one of those insurance license, you might have to miss out on part of the commissions.
So
And
you,
Tech
so
Command
they,
is the agent
so
of
they
record.
must, so these agents must be licensed in that state. They don't have to have the contracts, right? Because you guys got the contracts,
We have
but they've
contracts.
got to be licensed in order for you all to share commissions.
Yeah, so I mean, I'm sure that you all have to think about being appointed with carriers, you know, if you're not doing an ICHRA, but we do all that work, so you don't have to worry about the contracts with each carrier. But we do, again, just to be as much on the up and up as we can for the carrier commission part. In order for us to share that with you, we do require a license.
Gotcha.
And this just is just more detail about what Take Command is doing. I will send this deck. I think the important things on this slide are, because of the size of groups that you all work with, some of them, we're working on our client success model. So some of them are going to have a named, dedicated client success manager. It's 30 participating lives is kind of where we cut off today. We're restructuring, but I expect that to go lower. So you will have a named contact person for some of your clients. For those that don't have 30 participating lives, they go into a pool. So they do have client success managers. They have a support team, but it's more based on support tickets than I call John, if that makes sense. So that really is and that's way down here in the, you know, the small writing.
So, can you do one thing, Charlotte? Can you, okay, let me, I want to explain something because a lot of these agents are individual agents and they've never had to deal with a group yet. So this is kind of how you go into the group, you talk to the employer wants to do it. You get a census, which is an Excel that shows all the employees, all of them, whether they want coverage or not. And then you're going to indicate if they want coverage or if they don't, if they're waiving. You put down if they want to insure their spouses, you put down if they want to insure kids, and you get date of births and genders and all that. Okay, so in the regular group market, you would take a census, send it to a benefits group. They run quotes with all the carriers. Then you go in there, you present, they decide on a plan. Then the process, the hard work starts. Once you've narrowed down the plan, now you've got to get an employer app. Then you've got to get individual employee apps for everybody. And the ones that are participating will fill out the info, and the ones that are not will sign the declination. Perfect. All that is done, plan gets implemented. So on the ICHRA, Charlotte, there's the census that's collected. Are you guys doing the talk with the employer, with the agent, the employees, the shopping and the enrollment? Is somebody at Take Command doing that, or is the agent doing it?
Yes, so typically we will work with the agent and the client in tandem to build the plans together, because again, you all know your clients the best. You are their trusted advisor. So we try to keep you involved throughout the whole scenario. One question about the election tier. So this really is only relevant if your client is moving from a group to an ICHRA. We ask, what are they offering now? How much are they supplementing now, so that we can try to match their ICHRA program to what they were doing on their group health plan. So that's what the election tier is. Like, are they offering a silver plan now and paying 70% of it? Great. Let's start there when we build an analysis for your client. If they're brand new to insurance, have never done this before, it's a different kind of analysis. It's really more about how much can you afford? how much is the right amount to offer so that you're not taking away potential tax credits from your employee that are getting them from the government? That's really important conversations to have in the 49 and less space, because they don't have to. Some of your clients, it might be that it's better for them to not offer anything if their employee type is getting credits from the government and actually will hurt their employees by offering something. So these are all conversations, this ICHRA design, the number one step that we'll be talking through when you bring us a potential client.
Charlotte, one question here.
Yeah.
So on these ACA plans that are offered to the individuals, you guys technically are going to be the agent of record on it. Is that correct?
Correct. On the individual's plan. Yep. Okay, so what kind of clients do we see come to us the most? And I just want to check on time. I get a high renewal, or I have a 30% renewal again this year on my group plan. This is not sustainable. There's no way I can keep this up. Low participation. This is very relevant to your potential clients. It doesn't matter on an ICHRA. We did a survey about a year ago to CFOs and senior HR leaders, asking them the number one way they were dealing with rising costs in healthcare. And the answer was shifting costs to their employees. No one likes that answer. This is a really big reason why ICHRA is a viable solution for some of these companies that want to do the right thing but are getting priced out of the market, is not to put more burden on their employees, but to think differently about how they're offering it. If you have clients that are growing really quickly, this is a really great way and a more simple way to offer benefits so that when they bring in new people, they just set up the HRA. They don't have to consistently change their group health plan and add more members to the group health plans, et cetera. So again, one of the biggest things we hear from the finance leaders of your clients is, why can't I just give people a set amount of money and be out of the health insurance business? That's where ICHRA comes in. These are the kind of clients that we have right now, ranging in size from 1 to 5,000. And everything in between. So that's a really broad painted stroke. Some of your groups, you might come to us and say, hey, I think that this client might be a good fit. And then because of their size, it might be that a QSERA is better for them than an ICHRA. And that's something else that we'll look at. We do still have clients on QSERAs, those ones that are smaller. New to health insurance, we have a lot of clients that want to offer more benefits to their employees in a very predictable way. Some of the industries, and again, this is not an exclusive list. We have clients that span every type of industry, but some of the industries that we've been seeing success with are nonprofits. Typically, they're smaller and budget constrained. Hospitality, healthcare services like home health nurses, hospice care, long-term care type facilities. We've been seeing a lot of great success there. One reason we hypothesize is there's a lot of individuals that work in those fields that typically come in as higher cost claimants, and it's really hurting financially their employer. Again, ICHRA is a great way to move that risk to the individual market, because the premiums are priced solely on age and where the person lives.
Charlotte, I'm going to add is on the groups. I will tell you, I get a lot of restaurants that say, hey, I'd like to offer group. I'm like, no, you don't. You really don't. There's so much turnover and it's a nightmare. And also on top of that, the income the percentage is just the income is not there for the employees on some of these groups. So like you said, I don't know if it's here, hospitality, same thing. You know, there's just no way you're going to get the housekeepers, the waitresses and the waiters. And, you know, I got one that was about 300 employees on a home health care. They're making minimum wage. There's just no way they can participate in have the funds for group. So yes, I agree. This is a great platform for a lot of businesses where the average income is a lot lower. I think that's
Absolutely.
beautiful. That's like ACA target rich environment.
Yeah, you got it. Yeah, and the really the low wage earners, really, if the size of the group really matters. If they're less than 50, we really want to look at it and make sure that it's not hurting their employees to offer an ICHRA. If they're an ALE, they're 50 and above, this is a no-brainer. Absolutely a no-brainer. And then I'm just going to address, Michelle, your question. Will all employees be on the same chosen plan? No. An employee gets to choose their own plan. So if I'm in this part of Texas and I have 133 plans available to me, there's no way that all the employees are going to pick the same plan that I chose. It's really up to the employee to choose what's going to work best for them, and then Take Command helps them pick what's going to be best for them. So I hope that's an ALE is, what's the A stand for? Large employer. It's 50 and above. So if you're an employer that has 50 or more full-time equivalents, FTEs, you have to offer a benefit to your employees. It's required by law. And so that's really where the difference in how we're talking about the plan and the tax credits. This is really where your account executives at Take Command are going to help you really like in the weeds and in the details, but the ALE, it's 50 and above is considered an ALE. We work with groups from 1+. This is just an example of some of our clients. So we work with all client sizes. We don't have a minimum to work with us. The only difference with how you'd work with Take Command is which sales team and which client success team your clients would get. So we'll work with all of them.
Charlotte,
Okay.
are you going to get to the section where if it's a small group, what you can make affordable and unaffordable, and large group, it has to be affordable contributions?
I don't have a slide about that, and I would really recommend that we bring in the account executives that are much more versed in helping build a design with those. But yes, our goal is for 50 groups, 50 and above, they have to offer an affordable plan. And so we will help design based on that. Some of our clients want 100% affordable. Some of them, they look at it and decide that they can't afford to make 100% of the plans affordable. And so they willingly choose to say maybe 90% is affordable. And that's absolutely something that we're going to work through on that design session with you. And typically we're going to do that with just you before the client's brought in. And that's important too, when we start talking about commissions and revenue share that we send back to you all. If we need to bump it up for any reason, we want to make sure that that's in the proposal before it goes to your client.
So guys, let me kind of explain what affordable and non-affordable. So when an employer, let's say small group, they don't have a lot of money. So I shared with you on the comments what it was costing the employer to insure, to provide coverage for this group, almost $5,000 a month. If they don't have that kind of money, if it's 49 and under, the employer has a choice. They have a choice of offering an affordable contribution, which there's going to be some math to it, and they'll tell you. I'm sure that account executive will say, here is your affordable contribution that they're going to give to the employee. Or the employer can say, no, I'm just gonna offer 20 bucks a month or 50 bucks a month or $100 a month. Small group, you can do that. Okay, and then the employee can decide, I'm gonna take what the employer is gonna give me or not. They can say, I don't want that measly $100. I'm just gonna get an ACA plan and get my subsidies. Okay, on the large group, it doesn't work like that. When you have 50 and over, the employer has to make affordable contributions. Okay, it's a little bit different, and all that gets, I'm gonna assume the account executive is gonna brief the agent on those contributions. But just be aware of that, guys. That's what I'm talking about on the contribution side.
And the definition of affordable in these scenarios is 70% of a silver plan. And so that's gonna vary, of course, plan by plan, but on average. So a lot of times we see if an employer is moving from a group health plan to ICHRA, they're just offering 70%. And then we'll match their design to mimic it as a place to start, but just 70% of a silver plan is what affordable means. So why don't more clients come to ICHRA? I put this slide together just to help with understanding that the more time we have to talk to you and clients about ICHRA, the better, because a lot of the reasons that we lose or a client doesn't come to take command is because they weren't ready yet. They didn't fully understand how ICHRA and the individual market works, so they needed a little bit more time. We often see those same groups that said no for 2024, as an example, come back to us again to launch for 2025. Some of these are real concerns, though. The tax credits is a real concern for a lot of the group sizes that you might be working in. We want to pay really close attention to if a small group employer is going to offer a benefit, it's not detrimental to their employees. Owner wanted a PPO. You all know the individual market pretty well and know that this is just a lack of understanding of what the individual market does. Many companies want a PPO because they're trying to, they have one plan and they're trying to cover a bunch of people under the one plan that live in a bunch of different places. So we need this in our network. We need this in our network. We need these doctors. We need this hospital system. So PPO is just a much more broad coverage, but I'm picking my own individual plan for where I live. The PPO doesn't matter as much because I already know that my doctor is in network and the hospital system that he practices in is in my network. And that's the most important part. So some of it is misunderstanding. There are some real reasons why a client should not come to ICHRA. And again, the account executives that you'll work with are experts in this market and will help you understand if it's a good fit or not. We never, ever, ever want to bring on a client that it's not a good fit for because their employees are going to have an awful experience, and we don't want that for anybody.
And if I lost you there, guys, with what is the unaffordable and the 70%, I'm going to assume the account executive will get with that agent.
We will help you. Yes, we will help you.
Beautiful.
These are some of the questions that we start thinking about when designing a plan. And it's twofold. Number one, how much money should I give my employees? That's a really important question. What's the budget? Are you coming from a group health plan, and how much were you subsidizing in a group health plan? Employer mandates and affordability. These are all things that we're going to talk about when we're discussing what their initial design should look like. I would highly encourage you to think about, when you're working with our account executives, that this is an analysis and it's a flexible analysis. It's not a proposal. So don't call us and say, hey, I need a proposal for this client that has 12 employees and expect that we're going to send you back this thing and it's set in stone and go talk to your client about it. It's really, let's move this lever over here. Let's think about this thing over here and perfect it. all the way up to onboarding. So it's not a set in stone proposal. We of course have platform costs that are set in stone, but like what the budget and how much you should give and how we're designing it is really a partnership and a work of art, if you will. And then on the other side, the number two is, what can my employees go purchase with the money that I'm giving them? How many carriers available in each of the areas where employees live? What are the rates like compared to a group health plan? Is there doctor in the network, et cetera? So we want to look at those things. We don't want to say, yes, ICHRA is great for you because you have the budget to do it. But then the employees live in a very specific region where there's only two choices. So we're going to help sort through that with you all. There are different ways to kind of cut and paste and do class sizes. I will say the larger the client, the more this is a thing. Most of our clients are only varying premium by age. A typical group health plan, your premium is the same. Everybody has the same premium. In the individual market, it varies by age. So a 31-year-old's premium is different than a 32-year-old's premium is different than a 42-year-old's premium. So it's a curve based on age. Most of our clients just do that at a minimum. When you have clients that get larger in size, if you want to talk about, if you want to talk about kind of segregating full-time versus part-time, salary versus hourly, employee location, we can start building out classes, but there are some kind of caveats to building out classes. You can't have certain size classes. You can't say, I want a management class and a non-management class. There are certain things you're not allowed to do with the ICHRA that you are allowed to get away with in the group health plan. So just be aware there are regulations that you have to follow when kind of building some of the design and the classes. And then I'm just looking at my time. Let's talk about how you all are paid real quick. And again, this is a link that'll be in here when I send the follow-up. So there's two different veins that you will be paid from Take Command. One is a set fee. So we charge a $20 per employee per month platform fee for using Take Command services. Out of that 20, we share 7 with our brokers. So that's a set amount. That's the reliable amount. If you need to bump that 7 up to get to a certain amount of revenue, we can. I would say most of our brokers bump it up by a little bit. So that 7 is the service fee share. The other part, and this was kind of a short conversation we had earlier, is we will share half of the insurance commission that we receive because we're the agent of record and appointed with the carriers. We receive the commission for the individual plans, and then we split it with you. It varies by state. When you open up this compensation guide, it'll show you all of the states and just the differences, and I'll just show you that. So if you're in Alabama, you'd get $13, whereas if you're in Alaska, you'd get 10. And then this just shows the carriers that we're receiving commission from versus those that we're not. And again, I will be sending that afterwards. So at the minimum, you'll be receiving $17 per, it's actually per employee that's participating per month. So really it's a I don't know, people that are using our platform that have gotten insurance. $17. Again, if you need to receive more than that, we can bump up the service fee component. So that's how you are paid. We'll get information from you as the broker to pay you. And I think it's a month in arrears of the premiums being paid for your clients.
That's really not bad. I mean, that's getting pretty close to what the individual ACA commissions are.
It should. I mean, and we share half of those commissions. So, in Texas, if we're getting $20 from the majority of the carriers and you get half, you get $20 if you were the agent on the plan, but then we have this service component as well. So again, most of our brokers bump this up a little bit. That's another reason why when we start building an analysis with you, we'll want to have that conversation for what your proposal will look like before you put it in front of your client. Because what we don't want to happen is we put our normal proposal where it says $20 platform fee and then have to increase it because we didn't talk. So in the proposal, maybe it will say $25 platform fee because you need 12 on this side. So that's absolutely a conversation that we want to have between us and you before bringing the client in on what their service fee is going to be.
Charlotte, on the question, one of the agents asking, so if the employee enrolls the family, so we got a spouse and some kids, let's just say we have 4 members. Are they getting comped out for each member or just the employee?
Just the employee. Yeah, so that's something that we'll talk about, like if this needs to be bumped up because the average family is 2.3 or whatever. That'll be something that we'll talk about for if we need to bump up that $7. And it is per employee, not per member.
Gotcha. So if you got a spouse and kids, you're not going to collect any commissions on that. It'll just be the.
And then the last slide that I skipped just talks about how does it all work. So the traditional HRA reimbursement model is the employee will pay for their premium and then get reimbursed by their employer. Take commands in the middle to validate that they got coverage and then provide reporting to the employer for what to put into their paycheck. So that's the traditional way. We also do have auto pay. This is an upcharge, just so you know, but it mimics more like what a group health plan looks like in that there's a whole lot of things in the background, but basically the employer is paying for the premium on behalf of the employee using holding accounts through Take Command. And that reduces the burden of the employee a little bit so they don't have to upfront the money. It's all in the background, just like if they were on a group health plan. And with that, just who to go to for what. Your account executive probably is going to be different for all of you based on where you're located. I would recommend if you have questions, just route them to me and I'll get you to the right person. We have a lot of really great resources on our website. That's this link. If you already have a client in mind and you just want to put in a design request, there's a link here. And then mine and Leah's contact information. But again, Leah's for Texas and Ohio. But since you're all over the US, you can just reach out to me and I'll get you to the right person. I highly recommend the auto pay, Mike, especially if you think about if you're looking at employers that do have more low income workers, the likelihood of them being able to upfront the cost of their premiums is fairly low. So then they're at the risk of just them not taking anything if they have to upfront the cost. I do recommend auto pay. I think it's worth the upcharge. Jeremy, it's a $5 upcharge. So instead of 20, it would be 25. We're about to implement some packages that'll be a little bit different, but just know that most of our clients do the traditional reimbursement model, but a lot of them are moving to auto pay so that more employees are taking the insurance benefit. Any other questions? And feel free to speak up. Now we're into the slides. I think I got to most of them in the chat box. I'd be more than happy to stick around and answer more questions. I know we're at time.
Yeah, no, I agree. I think we're right on. Everything is good on here. So as far as getting started, because I'm sure the agents are going to be like, all right, what do I do here? So number one, So depending, so you shared Leah's in Texas and I took her information down for me. But if an agent wants, they have a prospect, like I know one of our agents here has a small little group. They want to do this. Should they contact you and then you're gonna send them to somebody in their area? What's the step?
Yeah, so if you already know a client, it's someone that you want to look into this for, I would go ahead and just fill in our design request and I'll pulling up, I was gonna show you what that looked like. Where is it? There it is. So you'll come on to, it's our website and you'll put in your information, client name, their industry, and then fill in some information. Are they an ALE? How many employees? And then submit that and it'll automatically route you to the correct account executive and they'll reach back out to you. I would recommend if you already know someone that you want to look into this for, you can go ahead and fill this out for us.
Okay. Can you copy that link and then put it in the chat? That way the agents can have it.
Absolutely. There you go.
Perfect. I'm gonna.
I do have a template for the census. I can send that as a follow-up.
Yeah, hit me with it. And guys, what I will do is I'll post it in our, I'm gonna create a folder in the school resources section for ICHRA. Also, will you email me the 2024 comp guide? I have the 2023, but not the 24. And I'll post that on there. And then I think you're gonna set this slide deck. I'll also post that in there, guys.
Yeah.
But
the deck, the comp guide, and the census template, I'll
Yes.
send as follow-ups. And please, if there's anything that you're like, oh, Charlotte, I was really confused, email me, call me, we can spend some more time on it. I don't want anyone to be confused. It's a lot of information. I think that would be my parting words is there is a lot of nuance and details about ICHRA that are really important for you and your clients to know. And we rely on you all to help us keep your clients calm because sometimes things can go wrong. Sometimes the individual carriers aren't sending cards on time. Didn't take payments when they should have. Like things will go wrong. And the more that we can help educate you and your clients about expectations, the better and the better employee experience. So please don't feel like you're bothering anybody. Reach out if you have questions. Our website has a ton of great information and we'll kind of send these things as a place to start for follow-up. But I'm sure there will be more conversations that we can have from here.
Perfect. So guys, take advantage of it. If you're out there and you're walking the street, you're hitting up small businesses, or even if it's a large business, if you're hitting them up there, or you're hitting on them, definitely have a little bit of ICHRA knowledge so that you already know that, and then get a census done. You're not gonna be 100%. I mean, I'm even kind of iffy on ICHRA myself. I have yet to implement one, but I would definitely know that you can call them up. They'll guide you, get your proposal, and then get with your local rep, and you'll get better as you complete them. That's the best I can say.
Absolutely.
Hey, guys, any of you all want to unmute and ask a question? We'll have it here for a few minutes. I don't have to leave yet, but if not, we'll leave it at that. But it's a good way to build a big book, quick, real quick. All right, I don't think there's any questions. So Charlotte, I'll wait for your email, and then guys, I'll be posting this for you all on that folder so y'all can have it as a resource. And anything else that you think, Charlotte, would be great, educational stuff. I'm going to try to download, but if you got something, send it my way.
Okay, I will do so. Thank you all for your time. I hope you have a great day.
Okay, you too. Thank you, Charlotte. Y'all have a good one, guys. Thank you. Bye-bye.